Greetings, members one and all of the Salivation Nation. Well, it's a familiar story now. Turmoil. Turmoil is driving the markets today. Gold rises 1%, but silver surges more. That should be encouraging to many silver stackers out there, but also discouraging on the other hand. Let's explore. Yes, this comes to us from CNBC, and gold rises 1% on the global turmoil, and the silver surging more. You know, it's 1507, it's over that $1,500 level again, and for gold, and futures rose 0.83%, but spot silver gained much more, almost 3% as of the writing of this article. We'll explore these prices here in a moment. And they're fleeing to safe haven assets after an attack on a Saudi oil facilities raised concerns over global energy supply and ratcheted tensions in the Middle East. You know, and they're still really assessing the outcome of this, and we'll kind of talk about that a bit too. This happened yesterday. Gold and silver prices jumped more than 1% on Monday as investors fled to safe haven assets after an attack on Saudi oil facilities raised concerns over global energy supply and ratcheted tensions in the Middle East. Spot gold jumped 1.27% to $1,507.40 per ounce, while the U.S. gold futures rose 0.83% to $1,512. The gold-backed SPDR Gold Trust exchange-traded fund was down 0.82% at $140.15 with 874.51 tons of gold in trust on Friday. Like gold, silver is seen as a safe haven investment. Those are kind of diametrically opposed terms, by the way. I'll just correct it right here because safe havens are not investments. They are protections. Investments tend to be seen as ways to make money, but when you have insurance policies and the like, it's to protect you when things get bad. The metal is also used in the production of consumer electronic goods as well as in the industrial sector, such as solar panels. Spot silver gained 2.96% to $17.94 per ounce. Got close to that $18 per ounce. We'll look at those prices momentarily. The moves came after Saudi Arabia on Saturday shut down half its oil production after a series of strikes hit the world's largest oil processing facility. The attack was claimed by Yemen's Houthi rebels, and the Trump administration has blamed Iran. Well, for those who are in the know, Yemen's Houthi rebels are completely supported by Iran, and it's against Saudi Arabia. The closure is set to affect almost 5.7 million barrels of crude production a day, according to Saudi Aramco. That's about 5% of the world's daily oil production. In August, Saudi Arabia produced 9.85 million barrels per day, according to the data from the U.S. Energy Information Administration. The kingdom's energy minister said that the attacks also led to a halt in gas production, which is set to reduce the supply of ethane and natural gas liquids by 50%. And as is predicted, U.S. crude and Brent prices jumped more than 9% each Monday morning during Asian hours. And we watched the markets as they opened up, at the 6 p.m. Eastern time here in the United States. When our Market Watch video, we saw the prices for gold and silver go up, and I think it's because of this. The attack raised tensions in the Middle East after the United States blamed Iran for the strikes and called it an unprecedented attack on the world's energy supply. In some cases, this is seen almost as an energy Pearl Harbor, and really, in many ways, you could almost say Saudi Arabia could make that claim there. For his part, U.S. President Donald Trump said the U.S. is locked and loaded, but his administration is waiting on Riyadh to determine who launched the strikes before proceeding on a course of action. Iran has dismissed those allegations as meaningless. And I'll stop right there because I don't think Trump wants to go to war with Iran. And I do think they want to verify it and make sure it's a sealed case. The other aspect of this is that we are now here in the United States the most energy independent that we have ever been, mainly because of shale oil extraction from shale known as fracking, and domestic production has been increased. And so now we are, I think, more exporting more than ever before, and we're producing more of our own energy, and we could literally be energy independent if we really wanted to. So things like the Strait of Hormuz and this type of action affects us less so now than ever before. Doesn't mean it doesn't affect us, and obviously the fact that it does affect the world is a big deal. And so there is cause for concern there, and obviously with oil going up, and we're seeing moves in the precious metals, but not as much as some had thought. Really, it is quite interesting. But what will this mean? Where Saudi Arabia has made talks, has said that they were going to release some from their oil reserves, and the United States will too, if needed be. Moving ahead, the U.S. Federal Open Market Committee is set to meet on Tuesday and Wednesday, and market experts expect the central bank to cut interest rates by a quarter point. I think that's going to happen. I think we can pretty much bet the bank on it, and that's why we might be seeing some of this price increase as well that could be baked in. But all bets are off depending on what that statement that comes from Jerome Powell about the economy and even about some of this situation, perhaps even geopolitical trends that could affect domestic economic policy. Global growth outlook remains subdued amid the ongoing trade war between the U.S. and China, which could potentially sustain demand for safe haven assets. Chinese Premier Li Jinjiang said in a recent interview that it was very difficult for the world's second largest economy to maintain a growth rate at 6% or more. So I think today's prices, we can safely say, geopolitics rules the day. Still not sure exactly what's going to happen with Brexit and trade with EU, and obviously I think we can safely say that there will not be any deal struck with a trade with China this year for sure, and probably not until the election. So let's pause here. Let's see what is going on with the markets. Look at this. Right now, the prices are subduing slightly from the highs. Gold is now back below $1,500, and I was expecting it to rise more than it did. I'm actually surprised of where the prices are now, back below that $1,500 level. Silver, though, is the clear winner of the day, and basically this means what we've been saying all along. The fact that it's moving up almost exponentially, well over 2% increase now, almost 3% at the highs today, to me that tells us that silver is back in the game as that hedge. And I believe that it's something that we're going to start to see, hopefully, that ratio tightening. If we see more of this, we could see that ratio tighten. And that also could mean, I feel, that if we continue to see these kind of moves upward where silver outperforms gold on a percentage basis, that ratio, that tightening of the ratio will be something much more substantial and sustainable, because people will start to see silver again as that hedge as well as gold. But we're still a ways off from that. It's got to be tested and it's got to be proven, in my opinion. Look at these other metals. Platinum is down $11. Pretty amazing. Palladium, its records, it's crazy. Look at that. I think that's a record high. It's got up to 1616 today. By the way, silver did reach over $18 a day for its high. But absolutely amazing. And look at the wild swing with palladium today. And somebody had commented on my video saying that he thinks that palladium is rigged. I don't know. It's crazy. Why the why the catalytic converter industry is not moving aggressively towards platinum right now is anybody's guess. Although, seeing as only about 5 grams per converter is in each, or of metals in each converter, it may take a bigger move than this in order for it to take place. We shall see. Rhodium, $5,000. Crazy. Look at that. But there they are. There's the metals. And what is the gold to silver ratio? It's down a bit, 83 to 1. That's still a very high ratio, and it's down 1.77%. So that is encouraging indeed. But I think it's going to be a test of patience with regards to the gold to silver ratio. But there you have it. Silver, the clear winner for today, in its movement in the markets, based off of what's going on with global turmoil with Iran. We'll see how things play out. Things could get a lot worse. Tensions could be a lot worse, and that could drive the metals up. Or, surprisingly, they may not, too. You know, it's hard to say. Sometimes these massive events, war and the like, don't have the effect, at least not in the immediate term, that one would expect on the metals. I'd like to extend a multitude of gratitude, y'all, for watching, and encourage you to please rate, share, click on that bell, comment, and subscribe.